Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
Welcome to another episode of Tax Bites, and today's continuation in that series, Tax Planning, The Myths. And this is the fourth myth in the series. And the myth is that clients believe you believe that you need complex tax needs or tax affairs to require tax planning. And that's not true. There's a lot of there's like three phases in my mind that's tax planning. And I'm going to explain that and kind of debunk the myth through these three phases. The first is the tax checkup. You're getting retired, and the best way to show this is examples such as you're getting retired or going to retire this year, and obviously you had W-2 withholdings last year. This year you're not. You're going to need to figure out what needs to be withheld from a pension, maybe Social Security, or other sources of income that can be withheld and put aside versus, do you want to write a check? And there's a plan that says this is what you need to do, each either through these withholdings or through writing checks each quarter to prepare and manage your tax affairs. And you'd come in that May, June, July time frame, and that checkup process can be done, calculations can be done, forecast for the rest of the year can be done, and therefore you have a calculation for what your needs are. The same type of calculation can be done for self-employed, doing the same thing to help you estimate your self-employment, your withholdings for, or your quarterly payments for self-employment tax and income tax and those types of things. Or if you're going to have, we're going to sell stock this year because we need to fund and buy a car, or whatever it's going to be, we need these funds. We're going to have to sell stock or exercise stock options through our company compensation plan. We need to understand what the tax consequences will be. So you come in for that checkup, calculations are done, and so forth to estimate for the year what the tax is going to be. That's a tax checkup. Well, the second phase is an expansion on that. And all these are going to expand on the prior phase or two. And the second one is more like a multi-year analysis of, you have some discretion on what's going to happen. I'm going to retire this year. I'm going to retire next year. Let's talk about the tax consequences of that. I need to sell stock options to pay for juniors, tuition next fall, or I can get a home equity loan and pay it through the home equity loan, and then sell the stock next year with a different tax implication, and therefore pay the home equity loan down next year with the stock option income or stock sale or whatever, those things. And those are where it's a choice between year one and year two, and you would need to kind of do calculations across two different tax years, a little more complexity. So that's that kind of multi-year plan, and then of course, or 1 or 2 year plan, and of course the larger, more complex one would get into a multi-year analysis, asset management, asset protection, things of that nature. And that's where you start seeing where you move into the more complex, traditionally viewed tax plans that people might say, I don't need all that. And many people may not need all that, but these 1 or 2 definitely are well within people's needs to do, and choices to make and things to consider. And those are the types of things that tax planning can meet a much wider client base than is traditionally believed to be as some special wealth class, so to speak, or wealthy client group. So I hope you understand that you don't need as complicated tax needs for tax planning as you might think. That's the tax bite for the day. I hope it's been insightful, helpful. Please like, subscribe, and comment, and have a good day.